With Trump's latest Iran decision now hitting the headlines, markets are on edge, and history tells us this kind of moment can ignite stock markets. But don't make the mistake of thinking everything will rise. It won't. That's why tonight we're revealing 10 carefully selected ASX stocks that stand to benefit the most if this story continues to escalate. As the brain trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets. We'll show you the professional stock market playbook that actually works. I'm Dale Gillham, joined by senior analyst Janine Cox and Philip Tortesky, and we are Wealth Within. Good evening, team, and welcome back to 2020. Well, I can't say welcome back to 26. Welcome to 2026. How are we?
And a happy new year to you too.
Good. I don't have to wear a red hat tonight, so that's good.
That is good. Looking forward
really
to
good.
the market.
Did you have a good Christmas?
Yeah, I did. Fantastic.
Good New Year.
Lovely with family.
Eat too much?
Yes, of course.
How about you?
All above, yeah.
You look rested.
Digging holes,
Digging holes. Oh.
landscaping, fun.
I just thought you might have meant with your wife. But
No, wow, that time's gone.
Cool. Well, okay, let's dive straight into it. Now, the big news coming up from Trump today. I'm going to go to you, Janine. What does it mean?
Yeah. Okay, a 25% tariff is going to be slapped on any company, or country rather, that actually does business with Iran, saying the measure is effective immediately and final and inconclusive. The announcement was made via social media, though no formal documentation or legal framework is being released yet, and raising questions about how it will actually be implemented and enforced. So we know Trump has a history of making these statements, but we know he's been pretty effective at slapping those tariffs on countries. So,
well, he does it knee-jerk. And we can't call him knee-jerk Trump. He just makes a knee-jerk decision.
So he means business.
Well, he does. And I mean, the thing is, it's be glad somebody it means business. It's too often we're not getting into things we need to be getting into, and keeping out of things we should be in. Did I say that right?
I think so.
I think
I don't know what he said.
I mean, look, whether you love him or hate him, things are happening, and that makes fun for the markets, doesn't it, really? So from our point of view, what is this going to mean for the market tonight?
I don't think it makes fun for the markets, because historically our market would have been in a full-blown boom in 2023, 2024, all the way through there. But we've had that pullback with Trump tariffs. Now we're going to see, we've had another pullback more recently, and possibly, sideways move from here. Depends on whether the miners are up and the banks are down, and, that could keep the markets sort of
So you're
sideways.
saying uncertainty and indecision?
Yeah, that just disrupts the whole thing.
I know, but I mean, I understand that. And like comparing the current bull market since the GFC, to the GFC rise from 2003 right through, whole different ballgame, isn't it, how the market's unfolded? And obviously we've seen a lot of uncertainty with COVID, and obviously Trump 1 and now Trump 2 and Biden in the middle of it. So a lot of things to discuss tonight, haven't we, guys?
Mm-hmm. Definitely.
All right, so where should investors focus on, and if we do see tension escalate, Phil, this is really important, because obviously we're not at war at the moment, or they're not at war at the moment, but there's tension.
There is, and there's protests, and there's a whole bunch going on in the Middle East. It's been going on for a while, but I think the usual suspects is where people are looking. We've seen gold and silver break through to new all-time highs last week. We're seeing oil finally get some love and traction. And to me, the energy sector is the big dark horse for 2026. You look at the stocks through that sector, we're going to get into some great stocks in a second with some of the ones we're talking about. But from a fundamental view, a lot of energy stocks right now, big stocks in Australia, are sitting on some really strong cash reserves. And they've got room to move and deploy, and the share prices are unloved right now. So I think watch that space, especially if we do see a tightening up of supply with the oil, which already now is starting to tick up. But they're my main three, and obviously defence, war stocks, Drone Shield gets spoken about again now, so
and
things like that.
Tanked more recently, hasn't it?
It has, yes.
So it's like, I think it was down 30 to 50% somewhere in the range.
And it's picked up. I mean, we've got to give Pedro his credit. He picked it as the hot stock for the end of the year, and it's up. It's moving. So we're going to have
giving too big a credit.
No, a little bit. Just a
He's learnt off you.
Yeah.
No, we've not.
He's doing good.
But it is. We've been talking about energy stocks for a while. Last year we talked about energy, but it didn't really take off, did it? But it's becoming more and more important the more we go along in this sort of stuff. So, but I know we got some great big stocks later, or we're going to bring up some great big stocks, but we've got some outliers that I saw in that list that I think are going to be pretty excited too. But how about we get into the charts now, Janine? What do you reckon?
I'd love to. All right, the first one is actually probably Pedro's favourite, which is Woodside, and it hasn't been doing anything really to write home about for a long time, except that here it made this break in October 2025 to test that resistance around $28, but came all the way back down to test support. So when you see a stock that's doing this is part of the reason why we say wait for that confirmation of that move, and we were looking for it to break out above these levels. It's so important because these sort of moves down could stop you out of a trade. Now, admittedly, if it does stop you out and you're just waiting for a new one to get back in, check your position sizes, because isn't that so important to be thinking about? Rather, it's not just the entry, but also position sizes. And I've had a few chats with people recently who were looking to do our course and talking about that, who didn't really understand the importance of that.
No, they don't. And that's the thing is, it's like tomorrow I'm on Ticker TV and for my first interview for the year, and I'm thinking, what am I going to talk about? And I'm thinking, to me, this year's a pivotal year. It really is a pivotal year. And I thought, well, why don't I talk about, well, what should be investing in 2026, but also how we're investing. And that's sort of what you were just talking about, like how are we going to do it? And I don't mean by how, by hit a button on the your broker platform, because it's so critical that we invest in the right things in the next couple of years. But then how are we going about investing, position sizing, all the other stuff? So can we get into a little bit about that today with everybody?
Honestly, you took the words out of my mouth. That was the next thing I was about to say, because I think this year, more so than ever, we spoke about it a little bit yesterday on Monday's show, from the point of view that, yes, 2024, 2025, looking for trends to unfold, quite easy, looking for stocks that are maybe bottoming out, big trends forming over the next 2 years. They're easy markets to get involved in because price is generally appreciating. But what do you do when you come into a market now that most of the stocks in the sectors that are hot are already up a couple of 100%? That is where I think what you're getting at, taking the skill in terms of structuring the trade right so you don't get taken out on the downside volatility that's increasing, is going to be so prevalent in 26. It's not just pick and let it go. I think that's the most important.
No, I agree, and it's not about the next best, can I say, meme stock? You know what I mean?
Oh, yeah.
All that. The thing that everybody seems to be talking about, it's not about jumping on it, it's being selective about what you're doing. And because what we know is that most people don't know how to sell. We know that because all the calls of people coming in saying, can you teach me to trade? We go, yeah. What's your problem? I don't know how to sell or don't know where to sell. And that's going to be more and more critical the more we move into this year and definitely into next year.
Oh, yeah.
That's going to be even more critical. So if you don't know how to sell, this is your big warning. You need to learn how to do that right now. So Woodside, I like what you've just talked about with Woodside. I think it's one of those ones that are setting up because energy, like 2 years ago we had technology, 2024 was technology. Technology didn't do well last year. Energy, we've been waiting to go, but it didn't really go last year, did it, Janine?
No, it gave a number of false starts, and that can often happen. The beautiful thing, if we can come back to the Woodside chart, we're just talking about, energy not going last year. We can see how many times it actually tried to get going, and now it's actually really going to show us whether this low is going to hold or not. So it's just about being patient, and there are really good opportunities, like Phil said, in this space.
Yeah, and the technology aspect of it, the demand is just growing more and more and more. Requirement for energy. So at some point, that's going to come to fruition.
I want to ask you a question before we move to the next stock, and it's. I know a lot of people last year they were chasing all the small caps and the low end, and we saw tons of them on the show all last year. Is that where the opportunities are going to be this year, or is it going to be on these bigger stocks like your Woodside? What's your thing, Janine?
I think bigger stocks, but I still think that, we say that trade with a trend. Some of those trends are actually really starting to establish now, and it could be that there are still opportunities in some of those mid-cap and smaller stocks. But obviously, like Phil said, some of the big runs have already gone. Okay. So it's a question about having that knowledge and being able to manage your risk better to take advantage of it.
All right, so you can bring up the next stock, but answer that first.
Yeah, well, I'm going to second Janine here, and I'm going to say selling. 2026 is all about knowing how to sell trends that are in showing strong momentum, structuring trades right, knowing how to sell, that's your edge in 26. It's not just picking, unless you're looking at sectors like energy that are yet to get going.
It's going to separate the men from the boys. Is that what you're telling me?
Yeah, absolutely. And it's really going to come to show who is disciplined in their approach, who has a plan, who has a strategy, or who's just buying on a whim and being rewarded over the last couple of years.
So it's basically the smart traders versus the gamblers.
Actually, someone said to me the other day, have I started the course too late? And I just said, this is perfect timing.
Oh, no.
Because, this is about being in that last part of the rise, but also being able to protect
Next
what
year's
you've got.
too late, not now. Last year was better.
Yeah.
Now's perfect. Next year's too late, because, and that's what people don't realise. I don't know how many times I did a podcast on this before the end of the year saying people go, when the market's better, I'll do the course. And you go, no, because you've been wanting to get in the market, but you still don't have the knowledge yet. Better get the knowledge when you're not as tempted to get in, but you need it when the S hits the fan, because if you don't have it when the S hits the fan, you're going to lose a lot of money.
Well, think about last year. They said the markets were going to crash during around tariff time, the world was going to end. We said no, it's going to go up. They said the materials sector is done, destroyed around earnings season. We said, well, price action isn't saying that. And the materials sector has had an amazing run. So in the midst of, you said a really important point last year when you said markets climb a wall of worry, and you're going to get that in mainstream. And then once it starts to get real positive and euphoric, if that's when you're thinking about getting involved and learning, that's when you need to be the most skilled and be able to get in and out at the right time. So
yeah, in 2023 they said the market was going to crash. 2024 they said it comes to crash, and every year we put out 2 or 3 videos saying not, and we haven't been
keeps
wrong
going.
yet. So the market's not going to crash at the moment. But anyway, let's get into the next stock.
All right, next stock is Santos. Now this one is another, as you can see, we're covering the oil plays first, another producer, big stock on our market. And Santos hasn't been doing much. Obviously we had that news that came out about the takeover, wasn't it? At one point popped up around that $8 mark. It's fallen away since, but to me, this is one of those opportunities. Yes, it's not in momentum, it's not trading. Like Janine said, it's time to wait, it's time to plan, but oftentimes that's the best time to be looking at stocks, because when you can plan properly, know your levels, get ready and make sound, smart choices. And for me, I think there are some short-term opportunities possibly around right now, because it is at that critical level in terms of support. They're the 2 most important levels right now for Santos. It's this $6 level, and I'll zoom it up on the upside, which is $8. So right now it's conducive to some short-term plays. Once it starts to poke up above $8, that's when the more medium to long-term opportunity gets real serious. So I think watch this, because it can happen very quickly. In a month this thing can break. So
it is setting itself up, isn't it?
The longer it compresses, the longer it's, soon enough when it does go directional, if it's above that $8, you better be prepared.
What do you reckon, Janine?
Look, I can see some good upside now that it's pulled back as far as it has. I was thinking, for a short-term trade, it might be cutting it a bit thin at one stage, when it pulled back. But now we're looking at this and we can actually see that there's 30% there to the high. So that sort of leaves enough breathing room there to take a trade once it's bounced around.
The ratio is pretty good on that, isn't it?
Isn't it?
If you're looking at that at the moment, so it looks pretty good. So what's the next stock?
All right, our next one is BPT, that's Beach.
Beach.
A mid-cap oil and gas producer active in Australia and New Zealand with multiple producing basins. So this one, it looks like it's trying to find support. It's got a lot of agreement about the price at the moment, but eventually it will break either way from that. So we've seen a bit of consolidation and a retest of these levels at $1. If it bounces again off $1, I think that could be quite interesting, but I'd like to see a really strong move up out of Beach before considering anything in this one, given what it's been doing over the past year or so.
It's looking like it's finding support though. What do you reckon, Phil?
Yeah, and the real big takeaway for me is you look at the low in COVID 2020, then you take a look at the low in 2021, and now it's the 3rd time it's approaching that level in 24, but each time the lows are getting higher. So this stock is really finding support at these levels, but if it does break $1 strongly, okay, you sit and wait. Once it starts to get above, I would even say give this room. 140, 150, don't be afraid to let this run on, because once it does get going, and it's funny, the mindset is the more it runs on, people think, oh, that's it, the opportunity's gone. I've seen it over the last year, especially with stocks. that we've covered, with emails that I get, people saying the stock's run 100%, 150%, I'm forgetting about it. The run's gone. But oftentimes that's when the institutions are getting involved. Liquidity's come in, retail's getting rid of it, and then you see the real run happen.
Well, institutions are really good at letting the amateurs take the risk, and they get the benefit because they let them take the high risk stuff to get the liquidity coming, and then they step in and make the real money and the safer money. And that's the thing is, but I think one of the things I was talking about, I did a presentation at the end of November in Queensland for a wealth club. And I was talking about mindset that people were going to need this year and into next year, and how we're going to have to be contrarian in our mindset, because when you see stocks run 100%, people think it's going to keep running. And you can't get yesterday's returns, but we've got to think differently, and we've got to be very much in that mindset of saying, well, geez, I've made a lot of money. Do I stay there? Or do I get out now? Or something's down, like this stock's been down. Oh, I don't want that. No, this is the one you should be looking at, and it's like when we're not looking at it, we should be looking at it. Not looking at it when it's run that 100% or 200%, and that whole meme stock and everything else. Now, I know you've got something to say on that one, Janine.
Oh, I was just like in awe of what you were talking about. As usual, it was such wisdom.
Say you're in awe of my good looks, the sunshine in Geelong, you've been swimming and getting a bit of a tan. No. No?
I haven't seen you with a tan for years.
I know, I've been out there with the pool, being the pool boy and doing everything else anyway. But look, one of the things I was doing over the last couple of weeks, just surfing YouTube, just having a good look and see what people are looking at. And I saw a couple of videos, or more than a couple of videos, on how to invest in 2026. And I went, I'm going to click on a couple of these, and they're all young kids, in a bedroom or a lounge room, or a little dark room with a couple of coloured lights. And they're going, one of them was saying, get rid of your credit card debt. And I went, well, how's that investing? That's better money management. It's not investing. And I found a lot of people, and I was watching these, I'm thinking, well, that's not how to invest. Really, it's not how to invest. You need to really understand how to invest. So if you really are somebody who's just getting into the market or thinking, should I get into the stock market in 2026? The answer is yes, you should be. There's never a bad time to be in the stock market. Yeah, there are better times, but there's never a bad time to start, and there's never a bad time to be in the market, as long as you've got the structure, strategy and the process. So if you are interested in getting in the stock market, whether you're an investor or a trader, you might want to start with this book. This is my first book. It's called How to Beat the Managed Funds by 20%. You can still get this for free. You've just got to pay the shipping to get it to you. There's a link in the description below here on our YouTube channel. So get a copy of the book. Have a good read of it. If you are an investor, this will be the best place to start to learn how to invest in 2026 and beyond. And I can tell you now that if the market does crash, if you follow what's in this book, you will never get caught in the crash at all. So click the link in the description below. Now we've got another stock. I know, Janine, this one's yours, isn't it?
This one is Triple T. Can I say that? TTT.
That sounds cool, doesn't it?
Titomic Limited, which sounds pretty fancy, doesn't it?
Sounds like a health drink.
Doesn't it? This one's come off a long-term low, and you can see there some serious resistance there, which it's actually showing you. The chart will just show you what's happening. It tells you a story the whole time if you know how to follow it. And most people are not following monthly charts. They're following short-term charts. Now, that's what we're trying to get you to understand, that if you can follow the long-term, this is where you're going to make your money. Advanced manufacturing and defence tech exposure. So this is all the rage at the moment. It's had that initial rise, and often stocks will make that first burst before, and that's the part of the test of the market. It's still below $1, so it's not something I'm going to be looking at, but in saying that, it may suit what you're after in your portfolio. Sideways move, it still hasn't broken out of that, but I think once it gets through that level, this thing could really seriously get legs and accelerate away.
Well, I think there's a couple of themes we're seeing moving into 2026. One is conflict. Yep. We've seen, obviously, Trump take the dictator, president, whatever you call him, from Venezuela, whatever his name was, and put him in, take him to the US to charge him under war crimes. I don't know what it was. I haven't watched any news really much. But we've seen, and obviously the Middle East crisis, and there's lots of talk of China and what's going on, and Taiwan, and there's so much conflict happening. So stocks that are in defence, I think, are going to be there's going to be a lot of money spent in defence, not just in obviously, building up defences, but obviously, if we end up having to go to war, which I hope we don't ever go to war. War's good for stock markets, very, very much so. Not necessarily a good thing going into war, but it's good for stock markets. So I think picking a defence stock's great.
Yeah, and when you look at this one, you can really see when things are starting to heat up. You look at the liquidity back in July 23, not much, and we can clearly tell by the shape of the volume and going through there, but then we start to pick up. And what's promising about stocks like this, oftentimes when you see them base out and there's not much activity, they'll resemble that type of liquid price action for a long time. But this one here is starting to widen out in terms of volatility. And when you see that, it's basing higher. This was very much like Drone Shield looked back a couple of years ago. So I'm not saying it's the next Drone Shield, but it's definitely in that space where it could get some real love.
I like it very much so. All right, you can do the next stock.
All right, well, the next one we have to cover is in the defence space in Australia. There's no one bigger than Drone Shield right now. So we want to have a look at this and see what's happened. Obviously, very volatile. So, if you're not prepared for moves up and down, again, putting a tick in, and I think that's another point in terms of, you mentioned 2026, what's important. I think being active, understanding active, understanding that it's okay and it's going to be favourable to be getting in and getting out of the market, taking your clips when they present, because the volatility of the market right now, the way it can swing up and down, you may find getting a second opportunity buying exactly the same spot as you bought the first time.
Yep.
And so being able to capture that profit and lock it in, I think that's something to really keep in mind. But if we go to Drone Shield, that's a real example of that.
Doubled in price in the last 5 weeks.
Yeah, it's really held up. It's come off that long-term momentum that it had, and it's really picked up. I mean, we applied this line back through here and said, you know what, this could be an interesting spot for Drone Shield. It has been right now. So I think, and this is the conundrum for people, trying to pick up a low is one thing. Get involved in a really strong moving market, that's a whole other thing. What's the strategy? Does it need to tighten up? Do you give the stock a little more room to move? Do you give it less room to move? These are the questions you need to consider. If you give it too little, does it stop you out and you miss on the run? Yep. If you're giving it too much, are you cutting into your risk reward? Is that not favourable? How late or early are you in the trend? Are you near the end of the trend? These are all questions that need to be asked,
Well, it does. And to me, I was just thinking what I'm going to talk about tomorrow on Ticket TV is buy and hold. You cannot be getting into the market now and think buy and hold, because you will get creamed in this next 4 years, because we're searching for a high on our marketplace, a long-term cyclical high, and we're going to come into another crash situation this decade, absolutely. And we've just moved we're in the last 4 years, so we've got to have a peak and a trough, and that's likely to happen in the next few years. And we've talked about this a couple of times, and maybe we'll do a show in a little while once we get a bit back into 2026 and say a little bit more about that. But to me, it's really important that people understand the market's not buy and hold anymore, not right now, and especially if you're going to retire in the next 3 years, 4 years. You're going to be, sadly, out of luck, you're going to have a lot of problems if you're thinking that sort of stuff.
Yeah.
And but we do need to move on to the show, don't we? Did you want to comment on Drone Shield?
I think we've done.
You've done it?
Yeah.
Done it to death.
Phil
Anyway,
did it really well.
Up our first round. And we really do hope you enjoyed those stocks. But we have some more amazing stocks coming up shortly. But now time for our trending topic for the week, so I'm going to throw it back to you, Janine.
Well, thank you. Are we about to see a $300 billion merger between Rio Tinto and Glencore? Should you get in on the action and buy Rio now, or is it time to sell? We'll share our thoughts on Rio shortly. Rio and Glencore together hold around 7% of the world's copper supply. And right now, copper is hot and forecasts indicate demand is not cooling down anytime soon. On the left, demand is continuing to rise, while on the right, you can see that supply is likely to fall after 2030. So this should keep copper prices strong, and this is good for both companies. Now, the deal could see Rio take over Glencore, or just some parts of the businesses could be merged. Now, remember, Rio divested all of its coal assets and gave them to Glencore in 2018. So far, the market is indicating a merger would be more beneficial to Glencore. Rio Tinto may have until the 5th of February to make a firm offer. Now to the most important part, let's take a look at the chart. So you can see there on the screen, I've got the monthly chart on the left, which is now taking up the full picture. You can see that the breakout that Rio had on this news has been quite dramatic, but you've got to keep in mind that Rio really hasn't done much more than it did at the peak in 2008, prior to the big correction it had in the GFC. So, you know, it's got a lot of room to move. Now, we're waiting to see Rio and come back to these levels. And remember, Phil was saying that investors will be looking at this thinking, well, how do you get on when a stock has risen so strongly? We've said that, you know, look what happened with Commonwealth Bank, look what happened with DroneShield, look what happened with lots of those stocks that accelerated away, and people thought that, you know, the opportunity was over. I'd say probably the best opportunity could be yet to come, but while there is a bit of uncertainty around the merger and the takeover, I think it'll mean that the market will just be sort of treading Rio with a bit of, oh, we'll wait and see, and therefore Rio's share price could come back a bit, if not trade sideways.
Well, you would be thinking, it's like, if the market's going up on this rumour news, you think anybody wanting to buy this share would be scared if Rio goes, no, we're not going to do it, because the share price would fall. And if you do buy into it now and they go, yeah, we're going to do it, then you've got to look at what's the price going to be.
So if you don't own it,
yeah.
Look, Rio's still a good stock for anyone that's got a long-term view of their portfolio. Also, for people new into the market, it's an easier stock to trade. Personally, I picked BHP and FMG, and sometimes you've got to look at your portfolio and how many stocks of different sectors you're going to have in the portfolio. But like Phil and Pedro said on a previous show, you could have had all three and it wouldn't have mattered. You know, they've all done similar sort of things. But I think Rio's sort of got ahead of itself now, and I think it'll come back to that, around that line or just above, to settle down while all this is going on.
So if you own Rio?
So if you own Rio, I'd hang in there.
Hang in there. If you don't own Rio?
If you don't own Rio, then I would say, look, if you've got a long-term view, you can still buy it as it's coming back. But if you're more in short to medium term, I'd say wait for another opportunity.
All right. Well, if you do want the skills to analyse stocks just like you're seeing us do tonight, visit our website, wealthwithin.com.au. But now let's get back into our topic and get into some more stocks. I'm going to throw to you, Phil.
All right, time for the gold and silver plays. Let's go. Northern Star is the next one now. This is amongst Australia's largest gold producers. And this is the conundrum I'm talking about. Looking to buy into a stock that has run, if we go on the monthly chart, I mean, Northern Star's had a miraculous run. And yes, the gold price has had a huge run as well, but we're talking since the lows of 2022, we've gone up about 300%. Now, we measure that type of move throughout the history of Northern Star. If I can grab that chart, and we can see that there is still, based back on the previous run, it was a lot less. So we've now extended way further and sharper. So to me, when we do see this kind of price action, it is always the caution that, hey, things will reverse at some point. And so because you have that overhanging, now to me the most important part is what kind of strategy are you going to apply to Northern Star? Is it going to be a short-term strategy? Are you going to still try and hold for the long term? But getting that timing right, I think, is ever more important when a stock is in strong momentum.
Look, I think it is. And obviously if there's more conflict happening or going to happen, then obviously a lot of people will start to go for these safe or defensive type areas like gold or defensive stocks, whether it's physical gold or buying gold stocks like this one. Yep.
And when I mean in terms of the structure and the setup, what I'm really talking about is the sell side. Buy, okay, you have whatever you want to buy, but how do you ensure you sell right? You're not selling too early, nor are you selling too late. That's the key, because and to me, the answer lies in a lot of the stuff we do. I mean, when we look at stuff, we're looking at that white space, you've often said, you know. And you know, you see people that come to us, they go, gee, what do you mean? How do you look at the white space? Well, it's like, hang on, there are techniques to project. I mean, when you're looking at stocks, you're forward-looking. We're forward-looking. We're not looking at just what happened yesterday. It's about guessing and projecting, not just guessing, that's the wrong word, but projecting technically where the stock's going to be tomorrow.
Yeah.
With a high degree of certainty. And so that's where these kinds of stocks, these trends, these bullish moves, that's where it's so important that you do know your technical analysis, that you understand that you're taught right on how to project forward, because that's going to be crucial in terms of selling right.
Oh, I totally agree with you, and it's you know, every now and again we see a comment on the YouTube channel from somebody going, you know, geez, you know, very high level technical analysis, and just because we're not putting it on the chart doesn't mean we're not seeing it, and this is what we do here. You know, the three of us here in Pedro as well, and all of our, you know, assessors and our students and all graduates, we actually see what's on the chart. So we're actually doing what Phil's talking about visually with our eyes, because we're just bringing some of these stocks up, especially some of the questions that we don't put full analysis on. You know, when we're doing our own research for our own stocks and buying and selling, and we're putting a lot of technical analysis on, but we're looking at that white space that Phil was talking about, because you can't get yesterday's returns. You can tell me, again, I get so many people that tell me they're traders and they tell me what happened last year or the last 5 years or last 10 years. And I go, well, yeah, so what's going to happen the next year or the next 2 years? And they can't tell me because their tools are very backward thinking, not forward thinking. And you need to understand that markets and stocks unfold in price, pattern and time. So price meaning up and down in movement in price, but they trade every single day and they make patterns in all that. And you need to understand how that forms so that you can get the right exit places. You're going to know when to run the stock and work with that and keep that run, like Phil was saying earlier. It could run 100%, but it could go 200 or 300. So when do you know to hang on to that, and when do you know where to get out of it? And that's what we're saying. If you're a trader, you need those skills, and you need them over the next 1 to 2 years, because if you don't have them, you're going to get hit with the S hitting the fan. And if you're an investor buy and hold, you're definitely going to get hit in the next couple of years, and your portfolio will take a shock unless you understand how to exit the stock market. And again, that's another reason for getting into my book. If you are an investor, it'll help you get out of, or not get caught with the stock market melting down or coming back. So get your copy. There's a link in the description below. But I want to go to, you want to say one more thing?
Yeah, just on Newcrest, just to give, I guess, a bit of value on that. The fact that it's pulling back now is quite interesting, and it's pulling back into that level.
Not Newcrest.
Sorry, there you go. There's where my mind's at. But the fact, if it can hold above this low here in October, I think as long as the trend remains intact, which it seems like now, that's your first marker that you need to keep looking for. So this looks like it's going to break through to a new all-time high. And, you know, the dynamic with gold right now, it's another important point to mention, that it's really driven by the big end of town.
It is.
It's so interesting to think that retail's not participating in gold. Weird.
You serious?
Yes. Yes, it's driven by the big end.
By the big end of town.
Yep.
So what are retail and I know silver's been doing well too.
Silver's been doing well. Yep, driven by the big end right now. Not getting involved.
Wow. Okay, so Newcrest is your hot tip, is it?
No, that was a
You're buying it for
slide of tongue. No, mistake.
Trying to get it out of here.
Well, Newmont, it's not around anymore.
Newmont's taken over. It's not Newcrest anymore. So, Janine, next stock?
Next one is PRU. This is Perseus Mining. Now, this one's had a stellar run, as you can see. It's gone to a new all-time high. So, okay, we have to have a look back here. This was September 2011. It was around the time just before the mining crunch occurred in 2011, and it fell in dramatic fashion. Just looking at the pattern formation, the way that it's unfolded, you know, we often see these accelerations, don't we, at particular points of the cycle, and that's what we teach our students to recognise where those accelerations occur. I would say right now, if you're not in this one, then I would say right now is not the best time, but keep it on the watch list. Like Phil was saying, don't just discount it, because it may come back and give a good opportunity at some stage down the track. You can see the angle of that rise and compare it to what it's done in the past and how it's just taken off each time. It sort of tries to follow along that sort of angle, but it doesn't last. This one's actually been a really good run. So if you are in it, you need some really good rules to manage it. And I just think a trend line is probably as good as any, as you say in your book, as to apply to manage that upside. And where will it come back to? Well, if it takes out this outside bar, this is the short-term movement on the share price. If it takes out that low of 2 weeks ago, then it's probably going to come back somewhere in this range of 450 around abouts, I would say. But right now it's looking good. If you don't own it, I would say now's not the right time.
Now's not the time. Be patient because it might come back again.
Exactly.
Now, in a minute, we're going to get into some viewer questions, and I know there's some ripper stocks in there. I know there's a couple that I'm watching specifically for my portfolio, so I'm glad the viewers did email those in. But if you don't want to ask us a question, info@wealthwithin.com.au, send your emails through and we can answer them on next week's show. So Next up, we have silver. So silver, I believe this one is Silver Mines. Now, this is the most pure silver exposure on the ASX. So if you want true pure exposure, then this is the one. Is it the best silver exposure? No. And what we're seeing with this one, but it's really different in terms of what we just saw with the gold, in that it's a different mindset again. Yeah.
Mm.
You're not chasing momentum in a really strong uptrend. So this is where, it's very important to overlay all those tools and answer that question, where is this stock likely to go to? Because that can give you the real nous to know, hey, am I just really breaking out of this accumulation? Are all things lining up on both avenues, fundamental, technical, to say that we're ready now? Or is it likely to just get stuck in this sideways momentum? And one big marker for me that I am seeing recently is this volume coming through. On the weekly chart, we're seeing really strong volume. We've hit that major low in January 25, and we're starting to resemble a really nice trend. And I think the major point here is you see it on all time gradients, but often when we just spoke even a second ago, is that trying to get in at the earliest part of the trend is never the meatiest part. This is a perfect visual example of that. Look how it starts off, slow moves compressing, and look when you're getting the best part of the move. It's 2 to 3 thirds of the way up of the trend, which is oftentimes the best opportunity. So right now we've broken out again. I like this stock, 22 cents. I think the way it's moving, as long as it holds, we're going to reach around that 30-cent mark in the short term. And if it can get above that 34, 35 cents, this becomes a serious long-term projection.
Well, it just backs up what we were saying before. I mean, the speculators get in early because they think it's cheap.
Yes.
Only to have it muck around and up and down and be more volatile. But then the actual real investors, the smart investors, get in once the trend's already starting. It has established which way it's going, which is the lowest risk area.
And the hidden part about that is the opportunity cost of your money. Not many people talk about that.
Yeah.
You've got a fixed amount of money that you can deploy at any one time.
Yep.
To get the most out of that money, you need to be deploying it at the time that the returns are going to be there, or the market's likely to move in your favour. So you've got to think about that as well, because there will be times, if you're not thinking about that you're stuck in holdings that aren't moving anywhere for 6 months, and you're watching your other stocks that you wish you were in.
Yes.
And that's the hidden key about being able to compound quickly when you do know technical analysis and that. So it's not spoken about much, but hey?
I was going to say, how often have you heard that when you talk to somebody and you go, why are you in that stock? And they go,
It's like,
because it was, it was a good idea. And you're going, so what are you doing? Oh, I'm hanging on to it. And you're going, why? And you can't be in this stock, which you want to be in, because you're still stuck in this stock because you've only got so much capital.
Yeah, it'd be nice if we had unlimited capital, but we don't. So use it wisely.
We do. I love it. Anyway, you can do the next one, Janine.
Thank you. All right. Look, the next one is DPM. Now, I don't have a lot of data here, so that's really, really helpful, isn't it? A larger precious metals producer with substantial silver output from operations in Europe, only major producing silver company among the pure silver names. So the on the ASX right now, which generates ongoing operational revenue and cash flows.
Yeah,
so
that's a big point.
So is this a demerger from something? Is this all the data there is on this one, Phil?
Yeah, and that last part that you read out, I think, is the most important, because a lot of these silver players, I mean, they're explorers and aren't cash flow positive. This one is.
So it's a genuine new listing that's come up. Okay, so looking at it makes it really difficult to assess where this stock is going to. But on the other side, on the flip side of that, you could also say that it makes it really easy as well, because there's not a lot of comparison of levels. That when we're doing analysis on a chart, we're looking at a series of it's a process of applying analysis to the chart, and then when you sit back and you look at it, you've got to make an assessment about which levels are the strongest. Well, this one, it's really dead easy to see what levels are going to be the strongest on it, because you don't have so much choice. But at the same time, there can be hidden things that you don't get from this chart that you would see straight away from a chart that does have the history. Now, people who do our course will understand what I'm talking about with that. And if you're new to the market,
I'm glad about that.
It's all ahead of you. So get excited because you've got a lot to learn with us. Now, looking at the chart again, we can see it. You could simply trade this with a stop loss underneath a low and try to manage it up and see if it continues to run. If really short-term traders might find different strategies. I know in our CFD Forex course that we offer to people, there are different strategies which are much shorter term, and people sort of look at us and they think, oh, but you're long-term trading, you're long-term investing, and that's not what we do. We do across the board from really short-term to medium-term to long-term, depending on what style you want. We'll teach you how to do that.
Well, that's a misconception by everybody. They go, oh, you have to learn how to trade the US market because it's different than Australia or the UK market or Bitcoin or currencies. It's not. Hey, all the same rules and analysis. We do the same analysis on all of those markets or all those stocks. Doesn't matter whether it's Bitcoin or the Aussie US dollar. The analysis is there. We might adjust some of our entry and exit rules and our money management rules, but that's about it. But if you learn how to trade long term, you can trade short term, you can trade intraday, you can trade whatever. That's what you're saying. And too many people, how many phone calls I've ever had, it's like, can you teach me to trade Bitcoin? I go, no, I'll teach you to trade. Then you trade whatever you like. It's simple as that. Or can you teach me to trade FX? I go, I'll teach you to trade, then trade whatever you like. But it's interesting how people still have that misconception that trading is something different all around the world. It's not. It's the same different day, basically.
Well, it's because one part of it's because they're programmed to look at indicators or fixed strategies that someone's packaged together. It's like, no, hang on a second. Break this down in simplicity.
Yeah.
Whatever market you go to, there's a buyer and a seller.
Yeah.
So really understand the relationship between the buyer and the seller, which, as you put out in the book and in the course, understanding that in its purest sense, then you can formulate a strategy on each market and each stock.
Supply and demand.
Not the other way around.
Yeah. That's all it is.
Good point.
Yeah. It's not some magical entry rule or some proprietary indicator.
Black box or
some black box crap. So,
yep.
So, but anyway, we need
hopefully
to
we don't get knocked off air after all this swearing.
Is it? No, it's not a swear. Is it a swear word?
No.
No, it's not. We're all adults here, aren't we? Let's go to another stock before I get into real trouble.
All right, next we have Codan. Now this one, again, really strong growth and huge run. It is in the tech and defence area, so very much like Drone Shield. I mean, it's had huge support in that space, but just going to the monthly chart, because I think that's the most important thing. I think the best opportunity for Codan when you are looking in these trends is identifying, okay, is there an opportunity to get a bit of a discount? Now, there was one around the 12th of December, which it's really bounced within a week. And strong trends will often resemble this type of price action. If you're nimble enough to get in at the right time, the growth that's happened right now, taking out the all-time high really quickly, unless you're switching to a really, really short-term strategy, I think the best thing is to wait right now, just a touch, and see what happens around this all-time high, see if it settles down, because a move like that in a week, oftentimes you do see the market settle down a bit. So I think if you were able to pick it up around this $29, $30 mark, and there are definite techniques around that, I mean, it has been trading to this level of trend. So somewhere down to 32, 34 would be the next logical place. But unfortunately, if we did this show a few weeks ago, I would have said Codan would have looked very interesting, but not now. it still looks good, but the opportune time may have missed for that nice medium-term trade.
Yeah. And the thing is that sometimes people watch this show and they go, just tell me what to buy, Janine and Phil, just tell me what to buy. But that's not what the show's about, because telling somebody what to buy, if they don't understand how to manage it and exit like you're talking about, doesn't really help, does it?
Yeah.
It's like I was chatting with a neighbour over Christmas time, because he knows what I do, and he started talking to me. I said, mate, if you've got a coin, you just flip it. I'll keep buying stocks on your flips. Just go from start at A and keep going down, and if it goes heads, we buy. If it tails, we sell. I will make money on your flipping the coin because of my money management and risk management. That's what's going to happen. And he goes, really? I go, yeah. People spend so much time looking around trying to find what to buy, but if you can't manage it, you're never going to be profitable, or you're going to be hit and miss all over the time and erratic with your trading. But that part of it is the most important stuff, not necessarily what you buy. It's how do you make your portfolio up, and the money management, position sizing, and your exit strategies, and all the other stuff that we actually talk about. So. And you're looking at me like you need to say something.
Sounds like you've got a few more beers to have with him yet.
Yeah, well, he's a chemist, so he's a smart guy. So he's good. And so we catch up every now and again. And he's one of these guys that at school he would have lined all his pens and pencils up in a row, and I'm the guy that would have messed them all up on him. Because he's got a manicured front garden and everything. Really lovely bloke. But we just chat, you know what I mean? And so you get these conversations. But anyway, moving on, shortly we're going to get into our hot stock tip, which looks amazing right now. But first, let's answer your questions. Now, Akshay writes, I would like to get your thoughts on WiseTech. I bought at $119.32 in July 2025. This was bought in my super fund, and since then the price has fallen 42%. I did not put a stop loss. Not sure if I can put a stop loss in super. So can you tell me if I should sell or hold, as my horizon is mid to long term for the super portfolio? So it sounds as if, Janine, he's bought it in his managed super fund that allows you to buy individual shares in your super. Yeah. But I don't believe in their systems you can set stop losses, like automatic ones. But
I don't think it really matters.
It doesn't matter.
If he understands what we teach, you don't need to actually set a physical stop loss with your broker. It's more about you deciding on what you're willing to give up or risk, and then just setting a floor on it, and then sitting and waiting for the safer opportunity, because clearly with the benefit, and everyone's an expert in hindsight, so you can see on the chart now that the time that you purchased was a higher risk time to buy. It was heading towards its high. It had had quite an extended rise, and often stocks will move in a rhythmic way. Now, this bar down was a first sign that something wasn't right, and the stock went in the opposite direction. So I'd say if he's still holding it, he still needs to set his exit. Like, where am I going to put a line in the sand and say I'm not willing to give up any more of my money? But right now, to me, it's starting to look really good with this low that's come in and a potential bottom here, although it's too early to tell yet whether the low's in. But it could be weeks away, it could be months away, but it's looking much better than it has been in a long time. And I think with a simple rule like you talk about in your book, that could have saved him from
absolutely. To me, click the link in the description below, get a copy, and you'll have the rules you need.
Turn it up the other way.
Turn it up the other way. That's what we're doing. We're turning the market upside down. But there's a super portfolio in you, or how to do that super portfolio. There's one how to get a growth portfolio, a mid cap, and there's four. What was the other one? I can't remember. Growth, super, mid cap, blue chip. 4 portfolio styles in there, and so you can pick the super one and follow the rules in that, and you won't have that problem anymore. But really good answer, because I agree with Janine. It still doesn't matter whether it's in a super fund, you still need to manage that downside on those stocks, and losing 40-something% is not really growing your wealth, basically. So there's rules around that, so that you would have exited, and you just go to your broker site. This is how you bought WiseTech. You just go in and sell it when it does trigger it. Whether you can put that into their system as an automatic thing, I don't think you can, but just go in and do it manually anyway. Now we're going to move on to the next stock. Now Andrea's email is next, and she goes, I've been looking at CSL for a medium-term trade whilst doing some back testing. I've noticed that there seems to be a similar pattern occurring at the moment to a previous pattern 7 years ago. Now in October 2018 it went sideways before taking off, and now it's doing the same thing. Could this be a setup for a rise in CSL? This is one I've been watching for a number of weeks, waiting for this one. So I was talking about this in November, waiting for this. So Phil's eyes have just got wider. So I'll let you answer.
Yeah, I mean, it's interesting. I think two things. Let's go to the chart. The October 18, I believe you mentioned, was this period through here. And now, assuming that the market's doing a similar thing, this is, I think, a telltale of where sometimes assuming just by looking with your, I don't know her level of competence with this stuff, but to me personally, I don't see any resemblance with
neither do I.
2018 or today, apart from just there being a level of where the market found support. But more importantly to me, it's context, right? When you're looking at stocks that have really come off like this and trying to compare them to the past, let's talk context. And if I was to do this and say to you, okay, in 2018, that low there resembled a market that was really bullish, strong company, performing, really bullish pullback. We fast forward to today, that is not the case. CSL has struggled for 5 years. It demerged, it's one of its most profitable arms of the business. Yes, it's pulled back and it's at that same level, but just to blanketly, and I think part of her email was to mention that, you know, she had a target of it going back up to around that $300 mark. These are the danger signs to assume just because in the past, clearly we've been in a downtrend for 6 years. What gives you the conviction that specifically a short-term low is the penultimate low after a 6-year move down? And this, we go into the conversation of confirmation. And this is where you can get tripped up thinking that it's so simple just looking at price action and linking two dots together in the past and saying, yep, that is it. So I would heed some more caution for CSL, because for me, a stock that's been coming down to this, the way it's been moving, I think there needs to be a lot more confirmation to get excited after what's happened.
I agree with you. I mean, that's why I've never entered it. I mean, I've been watching this for months, waiting and waiting and waiting. And that's the difference between a good trader and a speculator. A speculator will go, it's cheap, I'll get into it. You know, it was 300, now it's 160 or whatever, it's cheap. And it hit a level. And I'm going to get your comments on this, Janine, because we see people talk about support and resistance all of the time. But what is the strength of a support and resistance level?
And what's real accumulation?
And what's real accumulation?
Even if it bounces off it, you still don't know where, you know, with 100% certainty that that's going to hold. It could be, you know, the market participants messing around with the price and trying to create interest in the market, and all of a sudden they write about CSL had the biggest run for the day and the mum and dad investors pile in and then the short sellers come in and then they wipe it out again. Yeah. You know, that's what's happened numerous times. Yeah. And that's why it's really important to have a proper set of rules that even if the stock did turn and go down again, you know where you're going to get out. And that's the critical thing that you were talking about before. So if CSL takes out that low that's there, it could continue to trundle lower. That's the risk. You know, that there was a bank that called, I think it was UBS or Macquarie, I can't remember, who called was it $100 or something on CSL?
$100
yeah, or was it? I might be crossing.
Yeah, but that tells me to buy.
Stock, but they were calling it to fall lower, you know, than where it is right now. So,
well, that sort of makes me more interested. But it's, I mean, last week I was chatting to a person who calls themselves a trader, and they said, oh, you know, this I'm going to buy this stock, and I go, why? And they go, because it hit this support level, and I go, and? And they looked at me and they go, what do you mean? I go, and what? They go, I just want to buy the stock because it hit, and you just want to buy it because it hit the support level. And they went, yeah. And I go, not good enough. That's next. What else can we put into that? Which is what you both are saying is confirmation. Just hitting a point doesn't mean it's confirmed it's falling down. So we need to make sure it's going up. As Phil was saying, it's like, is it going to find that? Like Janine said, if it breaks that level, it's got further to fall. So right now, I'm with Phil. I can't see what you see from October, but I also see
just watch.
It's great to watch, and that's what I'm sitting back to watch. And this is what real traders do, or good traders do. They're stealthy. They are very patient, and they wait for the right triggers. Because when CSL gives us the trigger, it's going to be an amazing trade. But it could be 6 months away, or it could be 12 months away, or it could be 2 years away. We don't know. At the moment, it's not telling us to buy. Now, Henry is next, and he writes, I know you mainly focus on ASX listed stocks, but I'm curious about international oil exposure given recent developments in Venezuela and their potential impact on global supply. How might this affect large US producers like Chevron, and is this something investors should be paying to right now? I don't know. What do you want to tell Henry? I think you can go, Phil.
Yeah, I watched a really good article, a piece on this. I mean, when we're talking about
I like watching articles.
Yeah, that was funny. It was a video, but he was talking about the different grades of oil.
Yeah,
and
thick and clunky
Correct.
and hard to mine. And
Yes, the thickest, and that's what Venezuela holds the most of, and that is what the US, like in the 1900s, is designed to produce and refine. Yes, and so when you look at a company like Chevron, you know, that does have some exposure there. I think, look, it's definitely something you should be looking at. I don't see no issue with it.
Because they prefer light, sweet crude, yeah.
It's the tari stuff. I don't know the names around it, but it's one's like really, really light, and then one's like medium flavour, and then one's like a brick. Yeah.
It's like honey. The lighter the colour in honey, the sweeter it is.
Yeah.
The darker the honey, the little bit more intense the flavour.
Yeah.
So,
Which then, you know, brings up that whole other conversation of what really were the US doing in there. But anyway, I'm not getting involved in that.
yeah, but evidently it costs more to mine, get that Venezuelan oil out there. But you are right to ask the question, Henry, about how's it going to affect oil stocks? Because there's a lot of things affect oil supply. Obviously, you know, we've got Russia and other countries that produce a lot of oil. Obviously, the Middle East produces a lot of oil. So do they really want the Venezuelan oil? And I'm not sure whether they do or they don't. But you're right to watch it. Now, we're going to get into our hot stock tip for the week. Now, the pressure's on Phil because Pedro did a ripper with Drone Shield last month.
Yes. Now, I am going to get into Linus. There's the camera. All right. Now, before we get into the chart, check out the big news they released today, which was Linus Rare Earths have just announced that longtime CEO Amanda Lacaze will retire. She'll remain in the role throughout the end of 25-26 financial year. Now, while the board begins a global search for her successor, Lacaze's legacy is legendary, as under her reign, Linus became the world's largest non-China rare earth producer and a strategically critical name in the global supply chains. I mean, this stock took off and, you know...
I think it's a fabulous story, isn't it?
It is, yeah. You know,
not just from the point of Linus, but that female CEO.
Yes.
Because a lot of times female CEOs don't get the credit for this sort of stuff. And some of them, even though they're not the CEO, they're the ones driving the company.
And there's a lot of them in the mining industry. I know BP the other day, Woodside, so there's quite a few. But going to Linus, let's go and take a look at that chart because...
Sorry, I took you off the...
Yeah, that's okay. But with Linus right now, there are a few things that stand out to me. And this is the critical level at around 1280 to 1130. If I zoom that out throughout history, it's been the barrier for Linus moving forward. And what we're seeing now, which is very different to anything in the past, is that we're bouncing as support. And that is crucial for me. As long as we hold this $12 level, I think that is very bullish for Linus. We've seen buys really come in January and pick this one up. So I think right now, after a healthy pullback, as long as we hold 12, that is so crucial. And there is a lot of fundamental drivers. Obviously, the US does want to find, you know, options outside of China for their rare earths.
Absolutely.
And they're making serious moves for that to be the case. And so this really becomes a real viable option, you know, given it is one of the largest out there. But if we just go back to that chart and move to the weekly, there's a few more bits of analysis that are quite interesting to me. And I think watch this momentum as well. If it does decide it wants to pull back, which it won't be uncommon because often stocks like to pull back to those areas where they find the greens, which was around that $7, $8. That wouldn't be the worst thing as well, to find an opportunity around 10. But to me, it's the volume coming in. Look at the volume. The highest amount of volume that we've seen in history on Linus. So there's real participation. Don't be fooled into thinking just because we've bounced here that, you know, it is the end. And so, again, trade structure becomes ever so important for me now, understanding how trends unfold. What are the dynamics of that in price? Are we moving higher? Are we basing higher? All those things. As long as you're on top of that, I think you'll find multiple opportunities on Linus, not just one.
I want to ask you both a question, because we're on this, obviously, Linus, rare earths for batteries, EVs, you know, that alternative energy type stuff. You know, should people looking at a stock like this be looking at all, you know, what the EV market's doing and the demand for batteries, or is it a bit more complex than just keeping it that simple? I'm going to get your opinion, Janine.
Well, you know what I'm going to say, and it's always about the chart.
Nuclear energy is the way to go.
That's the big picture. He's got me, hasn't he? Trying to get those pink boxing gloves out already. So we can see that when we look at a chart, the trends start to form and then they accelerate. So it's more about being stock specific rather than just looking at, what we're talking about energy going. We're talking about, that consumer discretionary is already gone, but you could find a consumer discretionary stock that does really well over the next 12 months. So it's not about necessarily just staying focused only on those areas like rare earths. It's about looking at the stock specific.
Yeah, and I know if we see comments on the YouTube channel of people talking about they've got this big long story about some sector or whatever else, and as if it's validating investing in that sector. And I know you've seen some of those comments as well, and we've seen it with lithium in that sector. We've seen it with rare earths, and we've seen it with also uranium. We've seen all sorts of things like that. So, Linus, should you be looking at just the chart or looking at the broader picture like?
I think both helps, but when you're talking about, when we're dealing with a stock, we're trading Linus or we're looking at Linus, focusing on what Linus is doing company specific is important too, because just like gold, there are a lot of gold producers that have performed. There are some that haven't. In the defence space, there have been companies that have shot off, others that haven't, and that a lot of the time has to do with the specifics of the stock. Yep. But for me, regardless of all of that, it's great to have the theme on top. Price is your validation. If price is validating what you might be thinking, then more often than not you're onto something. Yep. So I would always place that first and then put the stories behind, because oftentimes you'll see price take off without the story, and then only later the story to come and validate what what price has done. So I think that's, if you were to align them in order, be very good at understanding price and getting in and out of a stock. Second, if you're good at the macro and the fundamentals of a company or the specifics, mate, you've got everything.
Yeah. One of my mantras when I'm talking with traders about this sort of stuff is I said, okay, you trade the stock, you don't trade the market. You trade the stock. That's what you're looking at. If I want to buy BHP or Linus or whatever it is, that's what I'm trading. I'm not trading whatever the market's doing. I'm trading that stock and what it's telling me to do. So if you've got a question, send it to info@wealthwithin.com.au and we'll handle it in next week's show. But if you do want more from us, check out our video, the hottest ASX dividend stocks to buy in 2026.